Good afternoon, everyone. My name is Marquita Berry, EA. EA is Foreign Enrolled Agent, meaning that I can represent you for tax matters before the IRS in any U.S. state or territory. I want to welcome you to the first of a series of educational financial videos for families, businesses, and the communities that they serve. I am the CEO and president of the Trillion Wealth Syndicate based in Indianapolis, Indiana, but we serve taxpayers all over the United States. And even if you find yourself working or living or studying abroad, there are many international income issues and business issues that we can assist you with or connect you to the help that you do need. So, we're going to get right into it today. I want to talk about educating our children, educating ourselves, educating the youth. Okay. Before we specifically get to my passion, financial empowerment through financial education, we're going to talk about education as a whole. Education is something that always comes up in families, whether you have your own children, nieces, nephews, you're now helping grandchildren, even your own educational experience. We hear education talked about a lot from parents to students to teaching professionals to some lawmakers. And there are some very interesting things with what is called the 529 plan that have changed as of July 4th, 2025. So a 529 is a college savings plan. We're going to talk about that today and the changes that are going to be effective for tax year 2025 and tax year 2026. Okay, so let's get into it. So, as far as the 529 plan, this plan has been around for some time and it allows you to, it's a qualified tuition program. It allows you to send money or contribute money tax free, tax deferred, okay, to an account for education specifically. So prior to the new legislation, contributions to 529 plans were for tuition, higher education, things of that nature. After the new legislation, the 529 tax deferred contributions can now be used for homeschooling. This is brand new. The fact that the 529 plan can be used for families that choose to homeschool or find themselves in a situation where they are now homeschooling their children. Okay. So you can open a 529 plan for your child, a grandchild, a niece, nephew, sibling, stepchild, spouse, yourself, or in laws, or any relative or any non relative, as long as they're named beneficiaries. So there is very important paperwork to have the right type of account, the beneficiaries accounted for, and all the paperwork. That is where Trillion can help you. You can find more information at the website shown at the bottom of my screen just here about how to make sure you're doing that correctly. Okay. So contributions to this 529 account do not require ownership of the account. So although, say, for example, there's tuition that's needed for my nephew, for example, and I've created this 529 account with tax deferred contributions to be able to fund his education. Other individuals can contribute to that 529 plan. Okay. Even if they're not the owner of the account and my nephew still be the beneficiary. Okay. You can gift up to $18,000 per year per beneficiary. That's a single person. A married couple can contribute up to $36,000. That was the 2024 limit, but that's indexed to increase. But for 2024, it was at $18,000 per individual, $36,000 per couple. Okay. What's changed recently is also, like right now for 2025, up to $10,000 for qualified education expenses can be taken from these accounts for homeschooling. I know there's been a lot of talk about a $10,000 homeschool deduction. What I have found is that up to $10,000 of tax deferred 529 contributions can be used for homeschooling for tax year 2025. The legislation is saying that this amount will increase from $10,000 to $20,000 for tax year 2026. Trillium will stay on top of it and make sure that our clients are getting all of the benefits of this new legislation and applying that properly to make sure you're in compliance. Okay. Different ways that you can contribute are through your employer. Some employers offer direct tax deferred contributions to a 529 plan. Um, Businesses such as LLCs and S Corps can also fund 529 plans, okay, for their employees' children, and even the LLC and S Corp owners' own dependents and or grandchildren, okay? Contributions are not deductible at the federal level, but may qualify for state tax deduction. So in just a minute, I'll talk briefly about some Indiana education credits and deductions. Also, with this 529 plan, if you are in a position that you can give more than the annual limit, there is a 5-year gift forwarding. So if you find your business comes into a lot of money, or if you come into a lot of money and you really want to contribute to the education of those that you care about, there is a 5-year gift that's tax-free. You can contribute up to $90,000 as an individual or $180,000 as a married couple at one time. There is a form that you must file. And again, you can get help with that from our office at the website, just at the screen here, trillionlife.co at the website. Okay. There is a specific form to file with the IRS to elect gift tax spreading over 5 years. Okay. And also those that use custodial accounts, the UGMA, the UTMA, those funds can be transferred into a 529 plan, okay? Even though the 529 will remain owned by the child. So that's a little bit different. It gets very specific, and you want to look at your custodial agreement. We can help you on the tax portion of that, okay? So some of the main benefits, tax benefits of 529 contributions, you have tax-free growth of earnings, tax-free withdrawals when used for specific allowed items such as college and vocational tuition, K through 12 expenses, which is new, the homeschooling portion of it. As of 2025, the homeschooling portion is new. You can use this for student loan repayment up to $10,000 per beneficiary. Very important. So this account can be created to help someone repay a student loan, and that contribution can be tax-free to bring down that student loan debt faster, which in turn we're hope is going to reduce debt to income, which is going to hopefully increase credit and open up opportunities for people that do have student loan debts that have been affected by recent legislation. There's also going to be a $20,000 rollover to a Roth IRA. This is set to start in 2026. You must meet eligibility requirements. So again, you want to get with a tax professional. You want to give us a call at the website here or reach out to us on the website. You can fill out a form. You can schedule an appointment. You can even do a get to know me session if you would like to do that, free of charge, just to learn more about me and my position on educating families, tax planning, and building generational wealth. There's more that you can look at on the Indiana specific updates. Okay, so the state of Indiana, 20% of state income tax credit for Indiana taxpayers that contribute to an Indiana 529, which is a college choice CD. You'll want to ask your banker about a college choice CD. If you reach out to us at trillionlife.co, we can connect you to some bankers that can help you with the Indiana 529 that gives 20% state income tax credit for Indiana taxpayers. Okay, up to $1,500 a year. It's $750 if you're filing separately. There's also credit counts contributions designated for both higher education and K-12 tuition. And there's also a benefit for third-party contributors who are Indiana taxpayers. They may also qualify for that credit. Okay. There is a contribution deadline in Indiana of April 15th of the following year to qualify for the state credit. Okay. So we just wanted to go over the federal 529 plan enhancements. And the main things are the qualified K-12 and homeschool withdrawals that was effective July 4th, 2025, for additional help with the proper forms and how to get these credits and maximize everything for your child's education and your business, and even making them a part of your business and how them working for your business, building your business, will not only put more money back into your business for the tax allowed credits and deductions, but it will fund their education when they can enhance your business or they can start their own business or a career. So we're going to talk more about it. Thank you for joining me today, and I hope to see you next time. Thank you.